You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music can mean only one thing. As they say in one of the lesser heralded Disney movies, it begins. Yes, I'm talking about Bolt. Look it up if you're not familiar with it. Yep, our week begins. Our broadcast week commences here on the Options Insider Radio Network with the bi-weekly dose of options goodness known as the Option Block. My name is Mark Longo from the aforementioned network, as well as, of course, from theoptionsinsider.com, the place to go to get your fix between the legion of episodes of content hitting you guys all the time these days. Supposed to have some interviews last Tuesday. Didn't have them due to the unfortunate circumstances back east with the hurricane. We'll see if we can get you some fun folks rotated through this week. The weather not complying with our interview schedule. Pretty much every other day last week, you guys are getting hit with content. If you like what you hear, you know what to do. Go to your platform of choice. Leave a review so other folks can continue to discover the slew of content heading your way known as the Options Insider Radio Network. If you have a question to comment, hit us up as well. We'd like to hear from you. If you want to go live, then you can get your comment or question bumped to the top of the list. We like those guys just a little bit more. I'm just kidding. We love you all equally. You are all our fun options children here on the old network. And let's see who's joining me to help school and educate and learn some of those options children. First, joining me from the quiet hinterlands of Chicago, where thankfully there was no tomfoolery last night, it is Uncle Mike TOSAW, coming at us from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Hey, we want to protect our options children out here in the great city of St. Charles. Great to be here, Mark.
Yeah, go out to the Weather Shield where all things are safe and no madness happens after hours out there because they don't allow it. They don't allow such tomfoolery out there in the hinterlands. And also joining us from the far hinterlands, not just of Chicago, but of these here United States, the quiet, tranquil hamlet known as the GIOVINAZZI compound. I think it's broken off from these United States at this point. It's its own entity on the far, far coast of Maine, lost in the mists of time. We are joined by the Rock Lobster himself, Mr. Andrew G. from OptionPit.com by way of Carmen Lyon Capital. Mr. G, welcome back to the program, sir.
It's good to be back. Quarantining for 5 years and counting. Working on the 6th year, I guess.
Yeah, well, you have been. Yeah, you were pioneering in social isolation. You were social isolating before it was cool, as we all have now grokked to your wisdom, sir. Well done. I doff my cap to you as we head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. This is indeed the portion of the show we break down what the heck is trading, what is lighting up our own collective tapes individually and indeed collectively. And, of course, you may have seen some interesting, fun headlines, more tomfoolery, to put it mildly, afoot out here in the Chicagoland area last night. Thankfully, the Option Insider Studios still up and running, still cranking away at your content, so you guys won't miss a beat, even though all the madness is unfolding yet again. Thankfully, no National Guard on our door. That's my barometer for how bad things are getting. When the National Guard's lurking, maybe you get the heck out of Dodge. But these days, no National Guard. It seems that they got it well underhand, at least right now, in the cold light of day. We'll see what happens. More curfews getting installed after hours. All sorts of fun afoot here in the major metropolis known as Chicago. But it won't slow down our flow of content for you here, at least for the time being, listeners. All right, move on into what's lighting up our tape here to kick off the week. Kind of another weird start to the week. Mostly green, mostly bullish, mostly Uncle Mike territory. The S&P up about 0.25%. The Dow. So it's kind of a bit of a flipping of the script of last week, where last week NASDAQ was leading the charge and other things were kind of languishing behind it, kind of mixed or up slightly less. Now the Dow's up a full 1%, S&P up 0.25%, and the NASDAQ's off 0.25%. So again, it depends where you hang your hat, exactly what kind of market you are experiencing today. Both gold and oil also up a little bit as well. WTI still well north of that 40 handle, now about 42.25, up about a little over a point today. So, you know, the options flow has been fading that north of 40 for some time out there in the WTI options, and yet it's persisted over 40. So interesting times afoot out there. Gold, of course, north of that 2,000 level. Again, 2,041, up another 13 handles today. They can't get enough upside up there in the precious stuff. And our old friend VIX Cash coming into showtime is at about 22.25. That puts it down, about a little over a handle, about 1.15 handles from last show. VVIX, a.k.a. the vol of vol, actually up a bit because vol hasn't been moving. Maybe moving in the direction opposite to what you want, but it is moving. It's up to 110, almost 111 out there. Puts it up a little over 4 handles, about 4.3 handles from last show. And our old friend VXX getting its downside mojo back, down to about 25.9, down about 1 1/3 handles from last show. So a lot of interesting fun on the radar. Let's go around the horn, see what everyone is paying attention to. Let's start the opposite of the way we came. Let's go back to the rockingest of lobsters first. Mr. Rock Lobster, sir, what is lighting up your tape on this interesting start to yet another interesting week, sir?
Okay, the biggest, most glaringest thing. Okay, most glaringest thing. Are you ready? If you had to guess right now, what is the September VIX future over the cash right now? If you had to guess.
I know on vol, I'm not going to look, and I know on vol views on Friday, the AAPL future was about 8 points. So I'm going to say the SEP future, I think it was about, 5 3/4. I'm going to say around 6 points.
Yeah. Well, that was a good guess. It's 5. It looks like it's around 5. It looks like it's come in a little bit. 5 points with...
You're teasing me. The way you were setting it up, I thought it had widened out from... I was like, okay, it's even wider.
It hasn't widened out. It's actually come in, but it is enormous, right? So the way I look at this is this. I think the Chicago violence, as sad as it is, might be kind of a top because, at least for all this violent stuff, doesn't mean more's not going to happen. But now, it's so bad that if the cities don't do something, then they're going to have to send the National Guard in. They have no choice. And then if you're a political person, you're like this guy, that guy, whatever. But if Trump has to send in the National Guard because your city's erupting, you're not winning if you're the mayor, I think. Because people are going to want it because their cities are burning down. So that could be a change in the escalation pattern, at least for all of this. So I keep my eye on it. VIX did not rally on this for a few minutes this morning. There was a little flutter, and then it was done. So we'll see how that plays out, but I think it could be right because it's kind of a line to cross. If the National Guard comes in, that's it. Then they're in your town, right? They're in your town, and they're going to restore order one way or another. There's no getting back from that. So I think that is a big thing. But also, if you think about the September cycle, right? SEP cycle goes out, and now you have the September cycle, though, is going to look at the October expiration, remember. So remember, the VIX is going to do a weird thing where, SEP will settle. It will look at October, and that will be far before the election. So what I think could happen is you could have this ramp down for vol before it ramps up again. So the SEP cycle is the last likely cycle. Needless to say, I do have some short vol contracts Short directional vol, but back spread overall. But I'm still leaning pretty short delta. But I think this is like a huge setup for prior to the election, prior to everything. So I think there's some opportunity in the SEP cycle. It's very big. It was wider on vol views. It was wider last week when I started looking at it and just watching, because nothing was moving down almost last week. It felt like, oh my gosh, is the vol ever going to move? Are these futures ever going to move? So I think that is, at least the way I look at stuff, that is a huge event as far as pricing goes. And then after that, the October cycle will start to be pulled by the November election cycle. So I think, for VXX, you're going to have to watch that product, because VXX will start buying those out-term futures, which have that crazy price, and then going into the election, I don't even know what's going to VXX will look like, because the premium in those futures are going to be enormous and the prices are going to be enormous. And you don't know what's going to happen with the move, but when they're pricing vol in the 30s, low 30s, and you have a 12% 10-day vol, even a 20-day vol now, I'm just telling all the viewers, the vol products are going to act weird. I think they're going to act somewhat normal into the SEP cycle if this premium collapses, and we might get a temporary low in VIX before it starts back up again into the election. So that's how I'm trading that cycle, and we'll see what happens. But as of today, tech is flat, and Main Street is catching a bid. Some oil stock is catching a bid, and hopefully the city settle down. We'll see, but there's probably a level of violence that is going to bring the troops in, and I think we probably saw it last night.
Yeah, it's funny how that bump towards the latter portion, which isn't really the latter portion anymore. Now it's just a few months away. But at the beginning of the year, it seems so far distant, this election bump. And it's a chasm now. It's enormous. We were just talking about how far off the OCK future is. It's just insane. But they're keeping a lot of that premium all the way through into January. If you look at the latter portion of that term structure, which we did on Volatility Views, if this stuff fascinates you listeners, go check it out. But they're pricing it through. Not quite as far as October, but still pretty hefty. I think it was around 6 points going through January, which shows that maybe they're thinking we talked about those quote-unquote war games last week, saying we may not know who the hell the president is going into Inauguration Day. So it seems like VIX futures are certainly buying into at least some post-election turmoil here, whether that takes place like what we saw last night, which is just civil unrest here in Chicago, or whether it's just a question of uncertainty over the vote count, mail-in, whatever that is. It does seem like the VIX futures are pricing in a little bit more juice beyond just the cycle itself. But yeah, you're right, Mr. Rothofster. September is an interesting one out there, because you're right, it's getting caught up maybe in some of this pre-electoral excitement, exuberance, fear, call it what you will, yet it doesn't go through that cycle. So maybe there are some opportunities out there to explore. Interesting stuff. Mr. Uncle Mike, sir, I turn our gaze over to you now into St. Charles. What is lighting up your tape and catching your eye out there today, sir?
Oh, silver's catching a bid today. I pulled back a little bit on Friday, and so now starting to move a little bit again today. So as I talked about last week, I adjusted our silver position from the collar to kind of a modified protected, hedged risk reversal type of position to where we are limited, but we're not limited on profit for quite a while now. The line in the sand's a lot higher at this point. So we got that lighting it up, as well as just continued talk about the upcoming Apple stock split. That's a lot of things that a lot of people are talking about as well. With today, it's interesting in that we're getting really close to the all-time highs in the S&P 500 again. And quite honestly, if you'd have told me in March that we'd have been close to the S&P 500 all-time highs in early August, then all I would have said is, well, we must have a cure for COVID or a vaccine for COVID then. But nope, we don't. So in looking at this, this market is something to where I'm still long-term bullish, but I'm very short-term cautious right now, just because of the fact that I remember in March, which was not that long ago, we had news of COVID, and there wasn't any specific news that came out that really started the downturn in March. It just happened one day. And we knew COVID was there, but it wasn't like once we hit the 1,000 cases or once we hit this amount, it happened. It was just one day the market just started going down, and it went down really, really fast. And so the other concern I have that's making me short-term cautious is that we are approaching the 339 mark in SPY. That's another mark that's going to be tough to push through. And so with that, I think that there is a lot of reason to believe this market could go up, but you got to be cautious in times like this. I can't emphasize that enough. This is really just this market reminds me a lot of, just like I always say, like I've said before, the triple option in football. They'll run the dive and bore you to death with it, play after play after play, and then all of a sudden they'll throw a deep pass on you when you're least expecting it. And so that's kind of how the market fell off last March. And if it is going to fall back, that's how I can see it falling back in the near future. But with that being said, I'm long deltas. I believe that we need to be bullish for the long term. As hard as it may be, I think we need to maintain that because I do believe in that. But make sure that you're exercising caution with what you're doing. Some other things that are of interest right now, looks like this week, from what it's looking like, Division I college football is likely, from what it looks like, going to postpone their season to the spring. So that's going to be a lot of revenue lost for a lot of big colleges and institutions and a lot of TV money as well. The Mid-America Conference, which is a smaller Division I conference, it's for schools such as Northern Illinois, Western Michigan, Eastern Michigan, Central Michigan, schools like that, where they're Division I, but they're not like the size of schools like the Michigans, the Ohio States, and things like that. Although they do compete with them fairly frequently, they don't generate that much revenue as the bigger schools do, but they announce that they're not going to be having their season. So a lot going on with that. And so for the time being, it looks like the NFL is still going to have their season. And we're going to see where this goes because that's going to really affect a lot of people because it's a lot of advertising money that won't be made, a lot of TV viewership that won't happen, and a lot of things that are going to affect the economy that could have a really big ripple effect. And with no college football, not only is it a sad America, but it's a lot of revenue lost in America, too, that I think we really need to keep a close eye on.
Yes, the Uncle Mike indicators that rotate and revolve around football. I think the option and the run play up the middle analogy, though, is certainly apt given what we've seen out here in the market. Because you're right, it bores, and all of a sudden, bam, it just blows your face off to the downside. And that certainly is how the downside has mostly unfolded of late out here. Super aggressive downside, and then fairly modest to mild aggressive upside out here. Let's see what's aggressive here in the broad market today, what people are trading out here in the options world. Let's start with some of the big dogs you guys like to trade. Let's go out to VIX. VIX actually doing some paper today. We've talking for a while about how it's been kind of languishing. We are coming up on those dog days of summer, notoriously a light and thin time for the options market, and VIX in particular tends to circle the bowl around that time in terms of just volume, not the value of the index itself. And it was threatening to break 300K to the downside. It's about 324 right now, and actually almost half of that on the tape right now. Almost 160,000, about $1.58 on the tape right now. So maybe going to boost that ADV out there a little bit today. If the VIX keeps moving out there and the markets keep moving, we shall see. A little bit of a weird one out there right now. SPY at about 2.2 million, so that's over half of its ADV, which is also a seasonally light, about 3.75 million out there. The S, 582,000, so also over half of its seasonally light ADV, which is at about 922,000 in the S right now. That's pretty light. The Q's, 590K on the tape. That's rocking and rolling, and the ADV is about 1.1 million out there, so over half of their ADV as well. And the Russell, IWM, is pretty much at it. The IWM is on fire right now. Let's see how much IWM is moving right now. IWM has traded about 510,000 contracts out there. The ADV is 524. Russell's up 1.25%. So we talk a lot of Russell on TWIFO. We need to rotate it more onto the odd block here as well, or the option block, just because it's moving and there's a lot of vol out there. So IWM pretty much at its ADV, doing as a percentage of ADV the most of all these big indices out here Let's roll on out into the single name, see what you folks are up to today. Number 10, look at this Tesla, all the way down at number 10. Still cost you 198,000 contracts to break into the top 10 today, listeners. So single names are on fire today. 198,000, that only gets you to Tesla. So a pretty quiet day in Tesla land. Number 9, Boeing, our friends across the street. I don't think they got caught up in any of this fun last night. Not a lot of looting to be done there, really. 211,000 contracts on the tape for Boeing. Number 7, JP Morgan, 214,000 contracts. Number 7, Kodak out there. Our old friend Kodak. Going to get to them more in a little bit out there. But Kodak at 228,000 contracts. Number 6, AMD, 293,000 contracts. Number 5, we're already over 300K now. 308,000 for Microsoft. Number 4, usually our Boeing symbol buddy. Not today. It's moving away from it. Up to number 4, Bank of America, 336,000. Number 3, Facebook, 357. I saw someone tweet it out over the weekend. Like, did I miss the Facebook buyout announcement? I thought that was kind of funny because I think it's just been on the rampage of late. 357,000 contracts for Facebook. Number 2, American Airlines, 409,000. That means you know us, number 1. Uncle Mike's former favorite. Now he likes to watch it from afar. Yup, it's Apple. 827,000 contracts. This thing has almost single-handedly been doing enough paper to sustain the brokerage industry over the last week or so. This thing is hitting over 1 million contracts a day. Multipack. Let's go look right now. Let's see what is the ADV out there in Apple right now, listeners, because it's been on fire of late. Multiple days over 1 million. ADV, we are at 866,000. So let's put that in perspective, listeners. Apple's ADV is 866,000, and the VIX's ADV is 324,000. Apple is almost averaging as much paper as the S. Now, obviously, notionally, the S is a much bigger, beefier contract. I get it. But still, just pure contract-wise, Apple is averaging twice, pretty much, the ADV of IWM, and the same as the Qs. So that's where we find ourselves today. This week, we find some interesting earnings on the tape. We got Marriott this week, Canopy out there in the cannabis sector. Cisco on Wednesday, cover your ears, Uncle Mike, LYFT as well. So we'll see the other side of the Uber cycle there with LYFT and what's going on in the rideshare and delivery world. Thursday, NetEase, Chinese video gaming name out there, and AMAT. And Friday, we've got DraftKings. A lot of earnings moves and earning move results reports. Hit on a couple really quickly. Hot off the presses for you guys. You guys can find it for yourselves over there, theoptioninsider.com. Marriott was popping off before the bell today. They went into their announcement, 93.78. They were pricing in 5.1%. Get this, listeners. We're talking about the underperformance of earnings volatility this cycle has continued out there in Marriott. You think, the hospitality sector has been annihilated, and yet Marriott only moving about 1.7%. So dramatically underperforming from an overall vol perspective. Let's look at a little bit ahead. Let's look to Cisco really quickly. Cisco is on the 12th after the bell. They were at 47.43 at the time of this report. They were pricing in $2.42. In the past, they've moved $2.39. So they're pricing in pretty much exactly in line with previous expectations. LYFT, they're after the bell on the 12th as well. $30.19 as of this report. They're pricing in $3 even. In the past, they moved $3.12. So another one that's pretty much in line with its previous straddles, which is kind of interesting. Let's go out to AMAT. They like to be in the top 10. They like to move these days. They are the 13th after the bell. 63.57 is where they were as of this report. They were pricing in $3.16, a little bit more juicy than in the past. In the past, they moved $2.65. So pricing in a little bit of juice, you can probably argue that's warranted out there in AMAT land because things are rocking and rolling out there in AMAT land. And let's see, Rick, here really quickly. You guys like looking at all this fun macro numbers out here? It's like the folks at FactSet crunch some numbers. I think MarketWatch was breaking all this down as well out here. What's been lighting up the tape? How are the sectors and individual names, how they've been holding up so far this year? What are the biggest winners and losers on the year out here? No surprise coming into this data is, now this is just from the low. So this is from March 10th through as of August 7th, so the end of last week. What are the best different sectors of the S&P in terms of performance? Well, no surprise. Information technology is 30.2. Right behind it, though, is consumer discretionary, 30%. You might say, well, how is consumer discretionary keeping pace with all the big tech names out there in information technology? Well, a little other tech name called Amazon is lumped into that consumer discretionary. Hence, it's pretty much neck and neck with the other tech listing out there. Then materials, 22.8%. And communication service, 19.2%. The worst performing sectors are real estate off 2.7% and utilities off 3.3%. Remember, that's not on the year. That's just from the lows of March 10th through now. On the year, let's see, the best performing on the year is still tech, 24.1%, followed by consumer discretionary, 18.4%. To the dark side, energy on the year is still off 38.5%. Obviously, energy has had a wild ride so far, like we all have, but energy in particular. And financials off about 20% on the year. If you want individual names, what are the biggest winners in the S&P 500 in terms of single names? West Pharmaceutical Services up 90.6% from the lows of March 10th and 82% on the year. Then we got Biomed. That's a good name. Biomed. What do? We're Biomed. Let's see. ABMD is the ticker for that one. They're up 88.7% from March and 82.2% of the year. Our old friend AMD, number 3, 87% from March and 85% on the year. So good run there and pretty similar. Not much going on at the beginning of the year for them, apparently. PayPal, number 4, 81% from March and 83.6% on the year. Let's go on to number 5 here. Cadence Systems, 72.5%, and then 56.5% on the year. Let's go to the dark side, see who, let's see, the biggest losers in the S&P 500 are. Cody. Haven't had them on the show in a while, but we've talked about them in the past. Ticker symbol COTY. They're off about 50% exactly from the March lows and 64.4% on the year, followed by Simon Property Group. Had them in the odd block in the past as well. They're off 44.2% since March and 58.3% on the year. Xerox, remember them? Xerox, off 41.6% since March and 54.5% on the year. Carnival Cruise Lines, obviously, you know why they're off 40.8% since March and 72% on the year. And then rounding out our top 5 here to the dark side are Delta Airlines, off 40.2% from March 10th and 53.5% on the year. Just some interesting nuggets out there for you listeners. Now it's time for our own interesting nugget. See what our Eye of Sauron has found. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild. Mr. Rock Lobster, you know, it's been a bit of a recurring theme with us here on the Odd Block and indeed on the show for a while now. A lot of you have had KODAK in your crosshairs ever since that big move back on, what was it, the 27th? Seemed like it was just yesterday, but it's already been a couple of weeks here. And all the subsequent madness that unfolded. The day, of course, it happened, you guys were hitting us up saying, what about this, what about that? We looked at the paper. And a couple days later and looked back on Monday, didn't see a lot except for some little bit of upside. We're going to get to that in a little bit. And then, of course, all the news came out about what's going on with the options grants. And, of course, those looked kind of dicey, but we assumed they had some paperwork in their back pocket to do the old corporate CYA. Because in the past, when these big trades have gone up, they usually do. They usually have that stuff. Turns out not so much. They had kind of an understanding between the CEO and the board about how I'm going to get this money. Let's do it the day before this massive influx of cash is announced. So obviously Warren and others got the bit in their teeth and decided to go after. SEC is going after that loan now has been put on pause. And so KODAK coming into Showtime was south of the 12 handle. Let's see where it is right now. KODAK at 1091, so south of the 11 handle now. That's important, the 12 handle, listeners, because that was the upper echelon for strikes of this, what the CEO was granted in those packages. The upper tier, I think he got some at 3 and some other prices, all very favorable in the light of that big move, but 12 was the highest. So now some of those strikes are out of the money, which is kind of interesting. But Mr. Rock Lobster, as you recall, we said there wasn't a lot of weird paper out there. Certainly in the corporate stuff, there was a lot of shenanigans going on, but in the listed options paper, it wasn't a lot of weird stuff, except for someone, Mr. Rock Lobster, had the foresight, the wherewithal to come out and scoop up 200 of the OC 5 calls for a whopping 12 cents right before it happened. This was back on the 27th there, because it was announced, I believe, on the 28th, the next day. So it happened, he bought these on the 27th for 12 cents. I remember saying at the time, Mr. Rock Lobster, that this guy seemed like he might be a little bit well-timed. The SEC is not probably going to go investigate these small lots, but maybe they will. It looks like Mr. Rock Lobster, this guy did all right. And he was pretty quick about it. Looks like he was pretty naked in what he was up to, because only a couple hundred of these contracts traded on Monday, and only a couple hundred traded on Tuesday, but a couple hundred did trade, and they were pretty much the exact same, very close to the volume of the day before. So if it looks like a duck, and it sounds like a duck, Mr. Rock Lobster, I'm going to assume it's a duck. It looks like they went off for $4.10 the next day. So he picked up 200 on the 27th for 12 cents, dumped them the next day for around $4.10. So he made around $4 a couple hundred times, so around 80 grand. So not bad for one day's work. Now, the weird thing about it is I'm looking at Trade Alert and some other platforms. They show the OI didn't change. That second day, that seems to me a little bit weird. There might be a little bit of a glitch in the system there, because I don't think the OI stayed the same exactly with this exact same number of paper going up as the day before. So I do believe this is probably our friend coming in and then getting the heck out of Dodge. Mr. Rock Lobster, would you concur that our friend came in, scooped, made himself a nice 80K, and got the heck out of Dodge, sir?
Yes, I think so. It's not a life changer, but it's certainly a good day. It's a great day.
Yeah, it's not a bad day. In the annals of days, that's pretty good.
But it does have the, I mean, realistically, I guess there was an outside chance that Kodak could have done something, so when the SEC comes and knocks on her door could be her. They have a reasonable explanation of why their timing was so good. But of course, it'll probably be somebody that works for a law firm that knew that, the administration was going to loan them some money or something. So it has all the width of a little bit slimy paper right there.
I think Elizabeth Warren will be knocking on this person's door as well and saying, what were you doing back on Monday picking up these options? If it walks like a duck and it quacks like a duck, chances are probably there is some duck afoot out here. Let's look here really quickly. Over that ORATs like to crunch numbers out here as well. Come into today's show. Kodak was number 9 on their overall scans in terms of volume versus their ADV. And let's see, they had 1.9 times their volume right now. So 168,000 contracts out there, which is actually 1.9 times their normal volume, not versus just their traditional ADV. They look at it a little bit different frame of reference there. So they're about 168,000 contracts coming into the show versus they've been averaging about 90,000 of late, which is still very elevated for Kodak, obviously. Calls to puts was at about 39,000 on the call side versus 129,000 on the puts. So go figure. Folks liking the puts out there right now. Call the put of 0.3 out here. Let's see. So, yeah, interesting stuff out here in Kodak. So we thought we'd just keep you updated. Some folks wanted to know what happened to those OC5 calls. It seems like, again, we don't know for sure because of some weirdness with the OI around there, but the numbers are too similar for my taste. This guy came in, scooped nice 80 grand. I could think of worse ways to spend a day, and got the heck out of Dodge. That's the other thing, but he didn't hold on to it for any longer. He didn't wait till the super mad levels coming in where you could really dump these things for madness. But still, I mean, yeah, these things got many, many handles in the money. So he could have probably got them out for a lot better than $4, but he got the heck out of Dodge, which is kind of interesting. All right, Mr. Rock Lobster, let's keep rolling. Let's see what our Eye of Sauron found for us today. Our next one is Magic Investment Corp, MGIC. Probably just called MGIC. I like calling it Magic, though. Sounds a little bit more fun. Ticker symbol MTG. So none of this flows with each other here. This name is trading $8.92 right now. This is the Mortgage Guarantee Insurance Company out of Milwaukee. So up the road a bit here from Chi-Town. $8.92 right now, up about 4.5% or about 40 cents out here. This is the name a year ago was trading $12.35. So a wee bit north of where it is right now. Looks like it topped out at about 15.25. That came, looks like right around mid-February, early to mid-February or so. And then you know what happened, listeners. It took it on the chin. On March 23rd, it actually got down to about 4.34 in the doldrums of March. So it got a pretty good drubbing. And then it kind of slowly started popping. Like a lot of names had fits and troughs. And you know what? This is another name, listeners. Add this to our list. I need to do a little informal study here because we profiled a lot of names here on the Odd Block. Where you look at this chart, I don't even have to look anymore. I know exactly where the secondary peak has been after that March sell-off before it starts selling off again. It's almost always June 8th. And this is yet another name, June 8th. Topped out, $10.27, and it hasn't really looked back at that level ever since. So the broad narrative we've been talking about with these massive tech names lifting all boats, certainly they're up, and they're up size on the year. But for a lot of these other names that fall into our odd block categories, June 8th was the high for the year, at least the recent, since March high for the year, and they haven't really looked back. So it is interesting, the dichotomy of what we're seeing when you start peeling back the layers of the onion of this market and see what's going on beyond these top 5 FANG names out here. A lot of them are not back even at their June 8th lofty highs of 10 and a quarter in the case of this name, and then now it's a buck and change shy of that out there. So this one hasn't felt the love, even though the rest of the market has. Let's see what our Eye of Sauron found for us today. Looks like calls out there in September, Mr. Rock Lobster, to the tune of 8,500 of the SEP 9 calls, going up for 50 cents. Our old buddy 50 Cent floating around, maybe in these calls today, only selling these bad boys. It looks like these were 50 cents at 70. This guy said, 50 cents for how many? I'll take them all. I'll take 8,500 on the Philly. He did a couple thousand more for a total of nearly 11,000 on the day out here. Listen, Mr. Rock Lobster, it seems like we got someone who's doing a little bit of the near-term fade, saying, you know what, this thing is not going to retrace even back to its June 8th highs of 10 and a quarter anytime soon, let alone back up to where it was in February of $15 or so, and certainly not by September. And he's willing to pocket a hefty 50 cents, or 50 cent, as the kids say, Mr. Rock Lobster, to do it. Is that your takeaway as well, sir? And also, do you have any thoughts on this kind of weird secondary peak for the market on June 8th that a lot of our names seem to be exhibiting, sir?
Well, remember that was right when everybody thought COVID was going to be great. Like, not great. That the recovery was going to be a V shape and everything was hunky-dory and life is beautiful. I don't know if but
well, that's today and yesterday and every other day in the market where we think life is beautiful.
Yeah, and you see stats now that are coming out that like new home sales, like people are buying houses in different places and like crazy home sale prices. So state of Maine, like homes are going like hotcakes. So I think there's a lot of activity. A name like this, this looks kind of buy-righty sort of action for MTG. I used to trade this stock, I don't know, a while ago during like kind of the mortgage crisis or post-mortgage crisis when it was supposed to be kind of getting off the mat. I never recall this stock doing much of anything. It will have one spectacular run into a housing boom, and then it all just peters out and goes to nothing. So I seem to recall this name kind of doing that. So I mean, I see the call right. It seems reasonable to me. It
does. It's not a bad bit of juice, 50 cents. For us. I'm looking right now, while you were talking, I was just pulling up some of the big FANG names to see how they performed around that June 8th window. And Amazon, Facebook, Apple, they didn't care about June 8th. I think Amazon had a little bit of a near-term peak there, but that was about it. The rest just blew through it and kept rallying like it didn't matter. So, and Amazon was back past it a couple of days later. So all the big names that didn't get all the headlines, June 8th meant nothing to them. Yet for these small names, June 8th was kind of the peak, the near-term peak, and they've been struggling to get back to that level ever since. The tale of two markets that we have unfolding on our screens here today, listeners. All right, let's go out to our last name, Mr. Rock Lobster. This one's pretty sizable. Put on your sizable trading pants, sir, because we're going on out to RIG, a.k.a. Transocean Limited. Let's see, ticker symbol, of course, RIG, R-I-G. This one's trading right now $2.38. So for other names in, let's say, the $8 range, or even Kodak was a little more expensive, now about $10 or $11 range. If those were too rich for your blood, $2.38 is what we've got for you here on good old RIG, a.k.a. Transocean Limited, a.k.a. the world's largest offshore drilling contractor here. But first, this is the weird one, Mr. Rock Lobster, because our Eye of Sauron was actually drawn to something different at first. It picked up for us a 7,500 lot of the Nove 2 puts, going up for 36 cents, so pretty much close to lifting the offer. We thought, that's interesting. Someone may be spending a fair amount of money for a cheap stock to hedge it at the 2 strike. Then we found another 7,500, so a total of 15,000 went up at that same time for prices pretty much right on the offer. It seemed like someone was buying some puts. We're like, okay, interesting. And then we dug a little bit deeper just to see what the heck was going on. And we found this Mr. Rock Lobster, which is pretty sizable in and of itself. It looks like it has the whiff, the air of a Jan collar in RIG to the tune of 84,409 of the Jan 1 puts, going up lifting the offer for 12 cents. These were 8 cents at 12. Someone said, I'll take all you got for 12 to the tune of 84,000. Then they turned around and dumped 84,409 of the Jan 5 calls for 15 cents. So they actually did this for a credit. They got 3 cents. So it's not even a zero cost collar, Mr. Rock Lobster. It is a 3 cent credit collar. So 84,409 times someone just collared himself off here. At least it looks that way pretty sizably. Maybe Mr. Rock Lobster will disagree and we'll have a good counterpoint here. But looks like someone, Mr. Rock Lobster, collected 3 cents to stop themselves out on the upside to 5. Let's go back a year and see how high Rig actually got. So 5 is not exactly a nothing strike, because this thing topped out on January 6th at $7.28. So he could potentially be leaving some money on the table here, but he's stopping himself out to the upside at 5, Mr. Rock Lobster, and to the downside at 1. I'm guessing he's more intrigued by that downside version of it. And if it goes up to 5, he's willing to take himself another pretty much 2x in this stock. Is that your takeaway as well, Mr. Rock Lobster? Size collaring afoot here in Rig.
This is a weird one, by the way. Like this collar, don't you find this an odd collar? Like you're going to trade the 1.5?
Yeah.
Not SPX OEX, but the $1, $5
yes.
in Rig.
Anytime you're buying a collar on a $1 strike, it certainly does raise the weird flag, sir.
It's weird. Maybe it's, Rig is what? Are they the last offshore publicly traded driller holding? There was Diamond Offshore, and these stocks used to be great, and now they're just getting, kind of destroyed, basically, the last that I could check. Maybe they got their last 8 million shares of Rig they need to do something with. I don't know. A really weird one, I saw the 1 puts. I also saw a bunch of 2 puts trading. Maybe they closed the 2 puts, but the pricing doesn't look like it. Really, really weird, massive trade. I guess they're looking for some upside. They don't want the stock to go to zero, but it could work, right? It certainly could work, but you would have to assume they're long a lot of stock against it, or they just think it's going to go bankrupt. It's just the problem with bankruptcy. It takes a long time for stocks to go to $0. It's not something that happens, next week. They're like, okay, we're going to declare bankruptcy, and the name goes to, it's already what? Well, I guess it's a $2 stock now. So, yeah, it does look like some sort of very weird short play. Who knows? Maybe it's Soros, and he thinks, all the oil drillers are going to go to zero anyway. So he's just giving it a little kick over to see what happens.
Soros, yes, the mastermind behind the scenes of everything going on in our world today, if you read places like Zero Hedge and others. This one we're going to have to come back to, because this is a weird one. You're right, it's weird for a number of reasons. The size of it is weird, the strikes is weird, all sorts of weirdness. And also those no puts, you might assume they're closing and rolling to jam, but they're actually opening. So 15,000 of those no puts are also opening. So someone's opening, someone's got some concern at the 2 and indeed the 1. Those trades are at different times, so they're not exactly related, but huge size going up on the 2 puts there as well. So a lot of stuff going on in this really cheap name today out here in Rig, listeners. But now it's time for Uncle Mike to have some stuff going on, because it's Monday. It's time for the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block, the portion of the show where Uncle Mike holds court on some options educational topic. Uncle Mike, we're just talking about a collar, which is effectively kind of like a vertical. It's all in the same expiration month. It's kind of straightforward. We kind of been there, done that. What if I said to you, I want to jazz it up a little bit. I want to get a little bit more exciting. Maybe I want to put one trade in one expiration month and then put the other leg, perhaps, dare I say it, in a different expiration month. So not just go vertical, but maybe change up my shapes, go a little bit diagonal. If I were to propose such a crazy endeavor, what would you say to me, sir?
I would say you're crazy, Mark.
Well, you would be right.
But But maybe he's not crazy on the trade, but Mark's just crazy in general. So that's something with which we need to be aware of.
That is also right, yes.
So, yes, for sure. But with a diagonal spread, and so the reason I'm bringing this up today, I always try and make the strategy block as relevant as possible to what people are calling me about and people are doing. So I had a guy today call me, trading his own account, and so he's in a diagonal spread on, you guessed it, Apple. And so what happened is he was playing the roll-up game, meaning he was long a long-term call, and then short a more near-term call, trying to create a synthetic covered call type of situation. And by doing that, it worked for a while, and he made some money on it. But now it's gone pretty far in the money because Apple was moving up faster than he could roll, which is can be common in Apple at times. So what I want to talk about with the diagonal spread is that if you're bullish and you do a diagonal spread, meaning you're moderately bullish, you think it's going to go up a little bit, it can really be a great trade. But you always need to know what your risk is with any trade with which you do. Now, of course, the obvious risk would be if the stock were to go down, you'd have to manage risk against it, meaning you'd have to either have a small enough position to where it wouldn't matter or to you that much and do nothing, or get out of the trade before it loses more than you want it to lose. And that's kind of the obvious, I think. But what a lot of people don't see with diagonal spreads is that as the stock goes up higher, if it goes up higher than your short strike price and it goes up significant amounts above that amount or above your short strike price, then your diagonal bullish call spread can all of a sudden become bearish. Yes, you heard me right. Bearish, meaning you're going to be short deltas. And that's where this guy was today that called me. When he did this trade, he was looking to have be slightly bullish on Apple, maybe sell some premium, maybe a little bit of a levered covered call. But now, because his short call is so far in the money, he is actually slightly bearish at this point, not by his sentiment, but by his position. Now, how is this possible? Well, let's say that the stock goes up significantly, and when it does that, your short call is going to run out of extrinsic value at a rate faster than your long call. So what's going to happen is that you're all of a sudden, if it goes up high enough, you're going to be short a call that has 100 negative deltas on it. Now, it may not have 100, but let's assume a worst case scenario on here. So that means you're essentially short 100 shares of stock. Now, while being short those 100 shares of stock, you don't have to worry about necessarily unlimited risk, but you are going to be short some shares because the long call that you have will still have some extrinsic value in it, and the delta will not be 100. It'll be less than 100. So what you're creating is a net short position. So the moral to the story is that if you're going to do a diagonal call spread, make sure that you're nimble. Make sure that you're adjusting. Make sure that you're rolling calls, doing whatever it is you have to do. But when doing so, make sure you do it soon enough to where you're not going to be put into a bearish position, because that kind of takes away the initial intent of the spread. And be very nimble. Watch it. As soon as it touches that short strike price, make sure that you have a plan. Doesn't necessarily mean you have to roll or do something, but when that short strike price is in the money, you need to be prepared for making an adjustment. And that is the strategy block for today.
Yeah, I've always said that diagonals are really where some of the rubber starts to meet the road on the options educational front. That's really more of the options 201, maybe even an options 301. That any sort of time spread type scenario, diagonal, just straight up time spreads. Whenever we start talking about those, that's when people start hitting us up with questions, because you're right, it gets funky very quickly, Mr. Uncle Mike. And if you're not prepared for it, if you're not really used to managing two different expirations at the same time, it can certainly get dicey pretty quick. So yeah, just even your plain vanilla time spread, just straight up at the money 1 month out, let's say, that can get dicey if you're not really used to managing those, let alone getting diagonal. So heed Uncle Mike's advice. Know what you're putting on and be prepared for it before it comes to pass. And if you're not, maybe you call the guy, Uncle Mike, have him walk you through how to do it. In the meantime, if you want to call somebody up or perhaps send an email or a tweet, you know where to find us, because it's time for a real quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's see what we can squeeze in here today. First off, like we like to do these days, let's start with some love. If you want to share some love with your fellow listeners as well, you know where to do it. Go to your platform of choice. In this case, it came from Lachlan Comport, who left us a nice 5-star review on Google. He said, best options podcast, full stop, exclamation point, and then he accompanied it with 3 smiley faces. So you know, Mr. Rock Lobster, forget the 5 stars. The real rating, the real value there, Mr. Rock Lobster, is the 3 smiley faces. Would you concur?
Of course, that's why we do it. It makes us happy because, you know, why would I come here and endure all these insults from the benevolent dictator of the Options Insider Radio conglomerate if I did not appreciate and live by the smiley faces that we get from them?
We live for your smiley faces, listen. I got to say, Mr. Rock Lobster, this episode has been fairly umbrage-free for you so far, so you're on a good streak. Keep it up. Of course.
Yeah. How long will that last?
Well, we'll see. Our next listener is educating us a little bit. This comes from our longtime listener, Neil Wales. He who's been freakishly precise on his end-of-year VIX predictions last couple of years. We were talking last episode, Mr. Rock Lobster. I think the last one you were on, we had someone writing in saying he did something on TW. We're like, what the hell platform is TW? Well, of course, it's Tastyworks. That's what Neil wanted to remind us. Yeah, we both blanked on that one, Mr. Rock Lobster. So, yeah, he was talking about a trade he did, whatever the listener's name was, I forgot, on the Tastyworks platform. They're still so new, I don't think of them as the TW acronym, but apparently that is what he was referring to out here. Let's do another quick one here. This comes from Scott. Mr. Uncle Mac, I'd be curious if you agree with this one. We had a conversation on our Advisors Option show last week, which I don't think it's hit the network yet. I think it was just a live stream. So look for that one soon, maybe tomorrow, listeners, for the Advisors Option. We got delayed, of course, by all the hurricane madness out there. The Swan folks were hunkering down rather than being able to record a show. So that episode a little bit late for the July episode there. But it's coming, don't worry. Let's see. We talked about the Series 7, maybe its utility or lack thereof for options traders and options-oriented advisors. And Scott chimed in and said, the Series 7 is basically worthless, regardless of what your investment philosophy is and what strategies you use to implement. Mr. Rock Lobster, Mr. Uncle Mike, I believe you're the only one around us here who has had a Series 7 recently. What are your thoughts here from Scott and his dismissive comments on the options utility of the Series 7, sir?
Yeah, so I mean, the Series 7, I dropped my Series 7 probably, 10 years ago, just because I didn't use it anymore. And I'm fee-based. I believe that that's a more ethical way with which to go about things. And that's kind of my take on the Series 7 at this point. I mean, it's not unethical to do it, but you're looking for a commission with the Series 7, and it's hard to provide advice, in my opinion, if you're getting a commission, because it's just kind of a conflict. So that's kind of where I'm at with it.
Actually, a good point. We didn't even touch on the ethical nature of it, just for its efficacy. But the ethics raises another interesting point. Check out that episode of The Advisor's Option coming soon, listeners. Meanwhile, we have to keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, we already talked about a little bit more distant around the block, fun things going on with the SEP term structure out there in VIX land. On the earnings front, if you like more macro, got some stuff popping off this week, like I mentioned, CSCO and LYFT after the bell on Wednesday. We've got NEO over there, actually. That's the name that's been hot of late. Not so much today, but has been hot of late. That's on before the bell. On Tuesday, we've got NetEase on Thursday for more Chinese-oriented easy for me to say, oriented names. AMAT after the bell on Thursday as well. And on Friday, we've got DraftKings. They out there dominating the faux gambling space. Maybe not that faux for much longer. We shall see. All right, a lot of interesting stuff. Let's go back around the horn. Let's start with Uncle Mike. Sir, what are you watching for the rest of this week till we can gather here together on Thursday?
I am watching just that 339 mark in SPY, seeing if we can make new all-time highs. I think that's a very important number for us to get through at this point in time. Focused on that, of course, focused on, anything news, for example. And that's pretty much it. And I actually have to get on another call here shortly. So if you are interested in learning more about St. Charles Wealth Management, go to stcharleswealth.com. Would love to have a conversation with anybody.
There you go. Hit the man up. He would love to talk to you. Maybe about adjusting your diagonals. You, too, could have your Apple diagonals adjusted by the famous/infamous Uncle Mike. And Mr. Rocklops, the same question for you, sir. What are you watching for the rest of this week?
I will continue to watch S&P 500 new highs, see if it happens, because I think the market will be definitely getting ahead of many things that the mainstream press is not. So it's kind of been leading for a while now. So we'll see what happens with all that. And then the second part is this crazy VIX term structure. As you look at kind of all the betting sites on the election, this could be a big opportunity. So both of those things, keeping my eyes on seeing what looks good to trade, and heck, whatever, just riding this crazy summer out. Why not?
Riding out this crazy summer, indeed. Every day gets a little bit crazier, which is always fun. All right, that music, listeners, means we come to the end of just this program, though. So if you're saying you need a little more, don't worry. We got you covered. It's Monday. I'll be back in exactly an hour with the folks from Crypto Patterns. We're going to talk a lot of fun things popping off in the world of crypto. Spoiler alert, it's been moving. It's been shaking. It's been rocking and rolling. There's been volume. There's been volatility, all sorts of fun stuff. And if you like a little bit of technicals, those guys at Crypto Patterns will walk you through that. I know a lot of you out there have the technical love, so we'll get into that in about exactly an hour. In the meantime, we'll pump some fun stuff into the live chat before we come back in an hour. And then, of course, throughout the rest of the week for all this fun stuff. But before we go, Mr. Rock Lobster, if folks are intrigued, they want to kick the tires and light the fires in this options world, but they don't know where to start, maybe where should they begin their journey, sir?
Go to optionpit.com, go to memberships. Mark will be doing a webinar on our Trading Legion. It has a lovely track record. New product from us, teaching people how to trade from the long option side, how to be cagey about your strangles and your straddles. Come check it out, and we'll be here all the time.
If I join the Trading Legion, do I get a sweet shield with like the Option Pit logo on? Is that how it works?
I really want the Legion hat, and I think we're working on that. I think after Mark makes the big move to Austin.
I think Legion, like the old Roman Legion, get a sweet shield. So maybe, I'm just saying, maybe look into that for the premium tier tchotchke. That'd be kind of fun. I would certainly put something like that up here in the old studio, the Option Pit Trading Legion. Check it out for yourselves. OptionPit.com. You know where to go for Uncle Mike, stcharleswealth.com as well. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to say thank you to all of you who downloaded, who streamed, who subscribed, who joined us live. We love you most of all. I'm just kidding. We love you just a little bit. And we'll see you back here in exactly an hour for Crypto Rundown, and then back again throughout the rest of the week for more of this fun before we're back again on Thursday for more of the Option Bar.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.